Hello friends, welcome to the book summary. In this video, we will see the detailed book summary of Learn to Earn written by Peter Lynch and John Rothschild. Before entering the book summary, kindly like the video and subscribe to our channel. Book's link is given in the description. You can buy it from Amazon. Let's start. Learn to Earn is a book written by Peter Lynch and John Rothschild, which was published in 1995. The book is targeted towards novice investors and aims to teach them the basics of investing and how to make informed investment decisions. The authors start by explaining the importance of financial education and why everyone should take control of their own finances. They then discuss the various investment options available to individuals, including stocks, bonds, mutual funds, and real estate. The authors explain the pros and cons of each investment option and provide examples of successful investments in each category. The book also covers important financial concepts such as diversification, risk management, and the importance of long-term investing. The authors use real-life examples to illustrate these concepts and make them easy to understand for novice investors. Another important topic covered in the book is the importance of doing research before making an investment decision. The authors explain the different types of analysis, including fundamental and technical analysis, and provide practical advice on how to conduct research and evaluate investment opportunities. In addition to the investment advice, the book also covers important personal finance topics such as budgeting, saving, and debt management. The authors provide practical tips on how to manage money effectively and build wealth over time. Overall, Learn to Earn is a comprehensive guide for novice investors who are looking to take control of their finances and make informed investment decisions. The authors provide practical advice and real-life examples that make the book easy to read and understand. Introduction: The companies around us. This introduction sets the stage for the book by emphasizing the importance of understanding the world of business and finance. The authors start by pointing out that everyone is affected by the companies around them, whether they realize it or not. From the food we eat to the clothes we wear, everything is produced and sold by businesses. The authors then go on to explain that while many people are familiar with the products and services offered by companies, they often lack knowledge about the companies themselves. This lack of knowledge can make it difficult for individuals to make informed investment decisions. The introduction highlights the fact that investing is not just for the wealthy, but it is something that anyone can do. The authors explain that investing is simply a way to participate in the growth of the companies around us, and it can be done with as little as $25. The authors also acknowledge that investing can be intimidating, particularly for those who are unfamiliar with the world of finance. However, they emphasize that with a little education and effort, anyone can become a successful investor. Overall, the introduction of Learn to Earn stresses the importance of understanding the companies around us and the role they play in our lives. The authors encourage readers to take control of their finances by becoming informed investors, and they promise to provide the knowledge and tools necessary to do so. Chapter 1: A Short History of Capitalism. In this chapter, the authors provide a brief overview of the history of capitalism and explain how it has evolved over time. The chapter starts by defining capitalism as an economic system based on private ownership of the means of production and the creation of goods and services for profit. The authors explain that capitalism has its roots in the Industrial Revolution, which began in the late 18th century and transformed the world from an agrarian society to an industrial one. The authors then go on to explain that capitalism has gone through several phases throughout history. They describe the early phase of capitalism as one dominated by entrepreneurs who started small businesses and built them up over time. This phase was characterized by competition and innovation, which drove economic growth and prosperity. The authors then describe the second phase of capitalism, which was marked by the emergence of large corporations and the rise of the stock market. They explain that during this phase, businesses began to raise capital by selling shares of stock to the public, which allowed them to grow and expand more quickly. The authors also discuss the role of government in regulating capitalism, particularly in the United States. They explain that government regulations, such as antitrust laws and securities regulations, were put in place to prevent monopolies and protect investors. The chapter ends by emphasizing the importance of understanding the history of capitalism for investors. The authors explain that by understanding how capitalism has evolved over time, investors can make more informed investment decisions and be better prepared for changes in the market. Overall, Chapter 1 of Learn to Earn provides a brief but informative overview of the history of capitalism and its evolution over time. The authors explain the key phases of capitalism and the role of government regulation, and they stress the importance of understanding this history for investors. Chapter 2: The Basics of Investing. In this chapter, the authors introduce readers to the concept of investing and provide an overview of the different types of investments available. The chapter starts by defining investing as the act of committing money or capital to an endeavor with the expectation of obtaining an additional income or profit. The authors explain that investing is different from saving, which involves putting money aside for future use without the expectation of earning a return. The authors then go on to discuss the different types of investments, including stocks, bonds, mutual funds, and real estate. They explain that stocks represent ownership in a company and can offer the potential for high returns but also come with higher risk. Bonds, on the other hand, are debt instruments that offer a fixed rate of return and are generally considered less risky than stocks. The authors also introduce mutual funds, which are a collection of stocks, bonds, or other assets that are managed by a professional investment firm. Mutual funds offer diversification, which can help to reduce risk, but they also come with management fees. Real estate is another investment option discussed in the chapter. The authors explain that real estate can provide a steady income stream through rental income or the potential for capital appreciation, but it also requires a significant initial investment and ongoing management. The chapter ends with a discussion of the importance of diversification in investing. The authors explain that diversification can help to reduce risk by spreading investments across different asset classes and industries. Overall, Chapter 2 of Learn to Earn provides readers with an introduction to the basics of investing. The authors explain the different types of investments available and their potential benefits and risks. The chapter also emphasizes the importance of diversification in investing to help manage risk. Chapter 3, The Lives of a Company. In this chapter, the authors explore the lifespan of a typical company, from its creation to its eventual decline or transformation. The chapter starts by discussing the different stages of a company's life, including the startup phase, the growth phase, the maturity phase, and the decline or transformation phase. The authors explain that each stage of a company's life presents different challenges and opportunities for investors. The authors then go on to discuss the factors that can influence a company's lifespan, including competition, technological change, and regulatory changes. They explain that companies that are able to adapt to these changes are more likely to survive and thrive over the long term. The chapter also discusses the importance of a company's management team and corporate culture in determining its success. The authors explain that companies with strong leadership and a positive corporate culture are more likely to be successful over the long term. The authors then go on to discuss the different types of corporate structures, including sole proprietorships, partnerships, and corporations. They explain the advantages and disadvantages of each structure and how they can impact a company's lifespan. The chapter ends with a discussion of the different types of corporate financial statements, including income statements, balance sheets, and cash flow statements. The authors explain how these statements can provide insight into a company's financial health and performance. Overall, Chapter 3 of Learn to Earn provides readers with an understanding of the lifespan of a typical company and the factors that can influence its success or failure. The chapter emphasizes the importance of a company's management team and corporate culture in determining its long-term success. The chapter also introduces readers to the different types of corporate structures and financial statements. Chapter 4, The Invisible Hands. In this chapter, the authors explore the concept of the free market and the role that it plays in the economy. The chapter starts by discussing the concept of supply and demand, which is a fundamental principle of the free market. The authors explain that when demand for a product or service is high, the price tends to go up, while when demand is low, the price tends to go down. The authors then go on to discuss the role of competition in the free market. They explain that competition helps to drive innovation and improve the quality of products and services, while also keeping prices in check. The chapter also discusses the concept of the invisible hand, which was first introduced by economist Adam Smith. The authors explain that the invisible hand refers to the idea that individuals pursuing their own self-interest can inadvertently benefit society as a whole by creating economic growth and prosperity. The authors then go on to discuss the role of government in the free market. They explain that while government regulation can help to prevent fraud and protect consumers, excessive regulation can stifle innovation and competition. The chapter ends with a discussion of the different types of economic systems, including capitalism, socialism, and communism. The authors explain the advantages and disadvantages of each system and how they can impact economic growth and prosperity. Overall, Chapter 4 of Learn to Earn provides readers with an understanding of the free market and its role in the economy. The chapter emphasizes the importance of competition and innovation in driving economic growth and prosperity. The chapter also introduces readers to the concept of the invisible hand and the role of government in the free market. Appendix 1, Stock Picking Tools. In this appendix, the authors provide readers with a brief overview of some of the most commonly used tools for analyzing stocks. The appendix starts by discussing financial ratios, which are used to evaluate a company's financial health and performance. The authors provide examples of common financial ratios, such as the price-to-earnings ratio, the price-to-book ratio, and the debt-to-equity ratio. The authors then go on to discuss technical analysis, which is a method of evaluating stocks based on charts and trends. The authors explain that technical analysis can be used to identify patterns and predict future price movements. The appendix also covers fundamental analysis, which is a method of evaluating stocks based on a company's financial and economic fundamentals. The authors explain that fundamental analysis can be used to evaluate a company's growth potential and estimate its intrinsic value. The authors also discuss the importance of staying up to date on news and events that could impact a company's stock price. They explain that keeping abreast of industry trends and regulatory changes can help investors make informed investment decisions. The appendix ends with a discussion of diversification, which is the practice of spreading investments across different stocks, sectors, and asset classes. The authors explain that diversification can help investors manage risk and minimize losses in the event of a market downturn. Overall, Appendix 1 of Learn to Earn provides readers with a brief introduction to some of the most commonly used tools for analyzing stocks. The appendix emphasizes the importance of conducting thorough research and staying up to date on news and events when making investment decisions. The appendix also highlights the importance of diversification in managing risk and maximizing returns. Appendix 2, Reading the Numbers, How to Decipher a Balance Sheet. In this appendix, the authors provide readers with a detailed guide on how to read and interpret a company's balance sheet. The appendix starts by explaining what a balance sheet is and why it is important. The authors describe a balance sheet as a financial statement that provides a snapshot of a company's financial health at a given point in time. They explain that a balance sheet shows a company's assets, liabilities, and equity, and is an important tool for investors to evaluate a company's financial position and performance. The authors then go on to explain each of the three components of a balance sheet in detail. They provide examples of common types of assets, such as cash, accounts receivable, and inventory, and explain how to calculate each one. They also discuss the different types of liabilities, such as accounts payable, long-term debt, and accrued expenses, and explain how to calculate them. The authors then explain the concept of equity, which is the difference between a company's assets and liabilities. They discuss the different types of equity, such as common stock and retained earnings, and explain how to calculate them. The appendix also includes examples of real-world balance sheets, along with detailed explanations of how to interpret them. The authors provide tips and tricks for identifying potential red flags and evaluating a company's financial health. Overall, Appendix 2 of Learn to Earn provides readers with a comprehensive guide on how to read and interpret a company's balance sheet. The appendix emphasizes the importance of understanding a company's financial position and performance when making investment decisions, and provides readers with the tools and knowledge they need to do so. Conclusion of Learn to Earn. The authors summarize the main points of the book and emphasize the importance of learning about investing and the stock market. They explain that the stock market is a powerful tool for wealth creation, but it can also be complex and intimidating for beginners. The authors reiterate that investing is not a get-rich-quick scheme, but rather a long-term strategy for building wealth. They encourage readers to adopt a disciplined approach to investing, focusing on fundamentals and avoiding the temptation to make impulsive decisions based on emotions or market trends. The authors also stress the importance of investing in oneself, such as by developing skills and acquiring knowledge that can lead to better job opportunities and higher income. They explain that investing in oneself is a powerful way to build wealth and achieve financial freedom. In conclusion, the authors emphasize that anyone can learn to invest and build wealth, regardless of their background or financial situation. They encourage readers to take the time to learn about investing and the stock market, and to approach it with patience, discipline, and a long-term perspective. By doing so, they believe that anyone can achieve financial success and independence. Book's link is given in the description. Thank you for watching. Kindly like, comment and share this video with your friends and family. Don't forget to subscribe our channel.
The Financial Freedom is the book written by me. In this book, I explained the pillars of personal finance and step-by-step guide to achieve the financial freedom. In this book, I have explained how rich get richer and poor get poorer with examples. Also, I have explained how much money required to achieve financial freedom using 4% rule. This book's link is given in the description. You can buy the book using that link.